yesterday, Trump announced a new tariff on Canada, Mexico, and China. So what does it mean and how you should react? Hello, everyone. This is Ahmed Saleh. So let's start by seeing what happened on the weekend. So Trump announced a new tariff on Saturday related to Canada, Mexico, and China. Canada and Mexico going to 25%, with an exception in oil for Canada, only 10% up. And China is going up by 10%, from 10% to 20%. Okay. There was a clause that if any of these countries retaliated, then there is going to be higher tariff, more than this. Okay. So two comments on this. First, on the oil, why the oil was exempted from the 25%? Because he don't want to have higher inflation, especially in gasoline and utilities in the northern part of USA. So if he had imposed 25%, then this will mean higher utilities prices and higher gasoline prices, which will affect the consumer. So he doesn't want this. Okay, he doesn't want a higher inflation. On China, he increased the tariff from 10% to 20%, which was lower than what he advocated for during the campaign. He advocated for 60%, and it's lower than what is now happening with Canada and Mexico. So probably he's just testing the water there, and he's respecting China as a superpower, and he will see how they are going to react. Then maybe take more in the future. Okay, so he's dealing with China differently from dealing with Canada and Mexico. So this is what happened during the weekend. So let's talk about some facts. Why especially these three countries? First of all, the total imports to US is about $3.8 trillion. That's 2023 numbers. And the top three countries actually are Mexico, China, and Canada. These top three countries, they make about 30% of the import to US. So he's tackling the top three because all the rest are it's very scattered across the remaining countries around the world. And those countries are making the biggest trade deficit of USA today. So the trade deficit is defined as the difference between export and import. So those countries export to US more than what they import from it, and that's why there is a trade deficit. China is 25, Mexico is 15, and Canada is 5. So the three combined is about 56% of the total deficit that USA has today. So he's tackling the import and he's tackling the deficit to the trade that he has today. There is also an expected revenue of about $200 billion, and this is about 15% of the budget deficit that US has today. It's about 1.7 trillion, so this will cover part of the deficit in the budget that US have. Okay, and this is basically affecting several products. So from Mexico, vehicles, electrical machinery, and nuclear reactor. And China, there is a smartphone and the portable computers and the lithium batteries. And from Canada, the vehicles, machinery, and optical, photos, technical, medical equipment. So as you can see, there are different types that will affect the day-to-day lives of the consumer in the US. And this is very important. Now, why Trump did this? What was he thinking of? First, he's using it as a negotiation bar. I will do it now, and then I will remove it if you comply to what I need. Second, as we talked before, he wants to increase the revenue to cover for the budget deficit. This will cover for about 15%. And long term, he wants to increase the manufacturing in US, and he wants to create more jobs for the American people. So this is what he's thinking of. Now, there are pros and cons for this move. The pros is that He will create more jobs. There are going to be more profit for the local companies, and he's going to lower the trade deficit. He's going to have higher revenue through the tariff. That will lower also the budget deficit, and there's going to be a lot of localization of the manufacturing plants in USA. The negative of this is that these countries are not going to stay silent. Already, Canada has announced 25% against all American products. So this can lead to trade wars. This will increase, and then Trump threatened in the separate clause that there is going to be an additional tariff if any country retaliate. So Trump is going to increase, and then Canada is going to increase, and then Trump is going to increase, and then this is what we call a trade war. This will definitely lead to higher prices, and higher prices will lead to higher inflation, and higher inflation means lower interest rate cuts, and with this means this is a bad news for the stock market, because people will prefer to put the money into the banks doing and not doing business. Okay, so what is the effect of this? We have a short-term effect and long-term effect. The short-term effect is that there is going to be high volatility in the market, and there is going to be fear of the impact that this will have. So many investors will take out their monies. We always say the capital is coward. Whenever something is happening like this, just investors will take their capitals, and the traders will take their capitals out. The traders actually first, and then the investors, which will lead to the stock market going down. And of course, with all this volatility and fear, there will be like a direction to go to the safe haven, which is like gold and the dollar. Long term, this means higher prices for all the countries involved. It's higher price for Canada, it's higher price for USA. All the countries involved will get higher prices because of this tariff, which will lead to higher inflation. This will lead to higher interest rate, and higher interest rate means like lower number of rate cuts. So this has a huge implication on the economy. On the positive side, as we talked, this will lead to lower trade deficit, lower budget deficit, and more localization of business in the US. So how can you trade it? That's the most important thing. What is the impact on you, and how can you trade it? I think the dollar will get stronger because of the higher inflation and the lower number of rate cuts. Maybe even the interest rate will go up again, which will mean higher dollar. Gold is definitely like going to fly because of these turbulence. So with turbulence, gold is a safe haven, and this is one direction that I think will flourish. Small caps, the companies that do not export outside US will not have an impact. On the contrary, they might flourish because this means more business for them. So this is what I suggest that we go for. What you can avoid are the companies with high export because of the retaliation. Then this will mean lower export. The companies with high international presence, China threatened in the weekend that they will impose some taxes, higher taxes on the American companies on China soil. So this will mean lower profit for these companies. So you can avoid that. And the industry with high international supply chain, like for example, technology, they get a lot of components from all over the world, from Taiwan and from China and from Europe. So all this international supply chain will be tariffed, and then this means higher prices, which can impact this industry. So this is what I expect. On the short term is negative news for the market, for sure. So next week, be careful about what's going to happen. You can watch first how will China like market will react to this, how will Japan market will react, and then you will know what will happen. If you see some liquidation happening in Japan and in China, then you will see it again in Europe, and then this will go to the US. So what I suggest is that you can liquidate part of your portfolio. First of all, go out of margin. You should not be in the margin in these days. I liquidated that as of Friday. So go out of margin, reduce your exposure. If you see the global market going red on tomorrow, then reduce your exposure, and better to go out or go to the safe haven of dollar, gold, and the small cap. Okay, so that's what we have for today. And if you like this video, then please press like, share it with your friends, subscribe to the channel. If you have any question, I'll be gladly answering them. Just put them in the comment. And just a reminder that this video is for educational purpose only. I might be right, I might be wrong. And so you should not consider this as a financial advice. Any investment you make is at your own risk. Thank you very much. This was Ahmed Saleh.